So could you explain how you work with a client step by step on the investment advisory process?
There are several steps throughout the journey in terms of selecting the correct funds according to your risk profile. So we start by sending a detailed list of all available funds in the market, divided by categories: private equity, venture capital, different funds under different categories. We always warn our investors that they are going to be confused. Why? Because if they are not confused, they will be the first one not to be confused, because it's too much information. It's over 50 funds. Each fund has a 40-50 page presentation, so it's just doing some simple math, is over 2,000 pages to read. So it's normal to be confused. This is an ongoing process. Then normally we go to a second meeting to discuss the risk profile of the client, if they want a conservative, moderate, aggressive risk profile, the type of sectors that they prefer, or the sectors that they don't like, which type of returns they want. And then we discuss a little bit what are the interesting, especially the sectors. If it is more agriculture, if it is more hospitality, if it is renewable energy, if it is funds that are investing in EBIT positive cross-sector small and medium enterprises, if it is education, if it is healthcare. So it's important to define which are the most interesting sectors. Then we prepare a funds comparison shortlist in order so that each investor is able to compare apples with apples. What are the fees? What is the track record of the fund manager? How many funds are they managing? Since when? What is the assets under management amount? All of that, the fees, in order to be able to compare. Then we set up another meeting to discuss the shortlist with pros and cons of each fund, so that the objective is to do a short list of the short list, if that makes sense. And then normally clients decide, okay, let's have a call with fund number 3, fund number 7, and fund number 9. So we organize the fund calls together with the fund managers, with the clients, to completely transparent, so that the investor can ask all of the questions that they want. Then after the calls, is going to be sent additional information like management regulations, other supporting documents for the clients to read. If needed, we have a second or third call with the fund managers to clarify any issue. In the meantime, we will prepare an investment strategy file combining different strategies, combining strategy 1 to 4, combining 2 funds, strategy 5 to 8, 3 different funds, strategy 9 and 10, 4 different funds, in order to be able to give the investor different investment strategies, scenarios. Then we set up another meeting where normally the investor already went through and picked normally 2 or 3 strategies, strategy 3 and strategy 8 as an example. And then we analyze together with the investor, again, the pros and the cons of each investment strategy that they selected. And basically, then it's the sleeping on it and making a decision, a final decision, which is the investment strategy. But what is important is the diversification. So we always tell our clients that rule number 1 is diversification, rule number 2 is diversification, and rule number 3 is diversification, because it's the way to mitigate risk.